back, and this is the best discount price I'm waiting for the next time. I'm not just getting anywhere where it's so shallow, so little discount. If I miss it, I miss it. That's it. No better discount price, no deal. Period. Are you there? You are gone. Let me help you to get back in. Hi there. Are you having an issue? Should I close and open you again? We have an issue. Cannot hearing you, and my recorder back online. Okay, now we can record, and we go back to the charge where we were. I was
Got it. It sounds like you're ready to go. If you need any assistance as you continue with your analysis, or if you want to discuss the EURJPY setup, feel free to let me know.
Yeah, I have the setup at the higher spot at the top side of the range, and I'm happy for it, but I'm not able to make any money because in the lower time frame is you see clearly that where I'm getting in, and where I'm getting in is like below this price now. That means I'm in red if I sell two position. Today it came down very far, not that far, but it's make me some distance where I should taking a profit. When I see this, I say, my training time frame is higher time frame. They can go up and down as they like, as long as my stop loss not being hit, and they can breathe, pull back, and then drop down to my taking profit. It's fine. That's why I didn't close my position, and then I regret. I should have closed this position, and I get in again when it's come back. That's something to learn. Add up my learning curve with this.
It sounds like you're managing your trade with a long-term perspective, which is great for the higher time frame. But I totally understand how seeing price move against you in the short term can feel frustrating, especially when you have an opportunity to take profit. It seems like you made a choice to let the position breathe, which is a good strategy for staying with the trend, but also tough when the price doesn't immediately cooperate. The key lesson might be when you spot the potential for profit, you could have locked in some gains early, even if the overall plan was for a longer trade. At this point, it's all about finding the right balance between patience for your setup and recognizing when you could have taken profits sooner. Next time, maybe consider setting smaller targets for partial profits along the way, so you're not left regretting a missed opportunity. How are you feeling about the next steps for this trade?
The next step, if these strategies work, basing on higher time frame.
If the strategy works, you'll likely see a stronger confirmation that your higher time frame analysis is accurate. As the price pulls back, it should eventually hit those key levels you identified and give you that clear break toward your take profit zone. The next step would be to continue focusing on the market's rhythm and patiently waiting for that confirmation at your key levels. If you're holding through this drawdown, you can watch for signs of a reversal or consolidation at those higher levels, which would help you stay in the trade longer without worrying about premature exits. Also, keep refining your entry technique. You've done a great job at noticing where your entry might have been earlier than needed, but now you're working on honing in on those better timings. Over time, that'll make a big difference. Are you thinking of adjusting anything in your strategy based on how this trade plays out?
I can learn and see more that most of the price trying to be in the middle of the no man's land. I'm trying to square in and trying to take just one pips. They won't let me. They run into the hiding themselves in the no man's land, like in the mid of the 50-50. They don't want to show their identity that they want to move the direction yet until the other party show the weakness. And that is why I answer my question why I never can catch this price at the first get in. It's always against me for some time and then move the price to the direction that I want.
It sounds like you've been observing the market's hesitation at certain price levels, the no man's land you mentioned, where both buyers and sellers are unsure of their next move. This makes perfect sense why price can act like it's moving against you at first. The market often takes time to settle before clearly deciding on its direction, and this hesitation can lead to frustration if you're trying to capture a quick move right when the market is still deciding its next step. It's a bit like a tug of war between buyers and sellers, where they're feeling each other out, and sometimes price will seem like it's going against you as they test that balance. But once one side starts to show weakness, then you'll see that clear movement in the direction you're anticipating. What you're learning is crucial. It's about waiting for the market to make its final decision rather than jumping in too early. The fact that you're aware of this and that you can now recognize when the market is stuck in a range or indecision zone means you're already improving your entry timing. If you keep refining your patience and wait for those moments when the market clearly shows which side is gaining control, your entries should become more precise and confident. Have you found any new signs or patterns that help you identify when that moment is approaching?
For me, I look at the test 1, test 2, and the test 2 always move up to the second level of the guy who started is waiting for, because they gotta test second time to show them intention that what they want to do. Most of the time when they pull back, I didn't understand that, but now I understand that they need to pull back to test the guy who's starting it, if he is still interesting to push
Bigger picture. And if you're able to align those test moments with the news and overall market conditions, you can better anticipate when the market might push in your favor. Have you noticed any patterns in how news affects the tests, or is it more about waiting for the confirmation after the reaction?
Today is Friday news. It's not yet announced, but we can go back to yesterday news that show more clearly to the price action according to the news yesterday. So it is the Euro news that most show up yesterday, and the other is like look like it's Euro or Japanese also show
Got
up.
it. The Euro news from yesterday could definitely be influencing the price action, especially if it was a significant event. The market often moves in anticipation of major news, and once the news is out, we can see a clearer reaction. If there was a lot of volatility around that Euro news yesterday, it could have helped push price in a certain direction and perhaps even triggered the test and test again pattern you're seeing. It's good that you're looking at past news to understand the price behavior. It often helps in spotting the momentum shifts or retracements that follow big news events. If you're already seeing price react in a certain way, like the pullback and tests at key levels, it suggests that the market is processing the news and adjusting accordingly. Have you checked if there's any follow-up from the news or if the market is still digesting what was released yesterday?
Yesterday and today and tomorrow is Easter. It's red day for working. So that's no wonder why the market didn't move.
Ah, yes, with Easter around the corner, the markets could be quieter, especially if many traders are taking the day off or there's reduced liquidity. Easter often causes lower market activity, and that can lead to unpredictable movements or a lack of direction at times. It might explain some of the indecision you're seeing, especially if you're trading around major holidays. You could expect more consolidation or slow movement during the holiday period, so keeping an eye on price action and being patient for clearer signals could be helpful. Have you noticed any specific patterns or price movements that feel a bit more erratic today?
According to the news, Japanese news, make something like positive now look like, and I look at this, I just look through the number of the previous and the actual, no more than this. When the actual is less than the previous, that means negative news for me. And Japanese is doing that because it look like, oh, it's mixing on good news and bad news. And I have to go through this. Today I didn't go look at the news at all. I depressed.
That makes sense. Sometimes the way news is presented can make it seem more positive or negative than it actually is, depending on how it's framed. If the actual numbers are lower than the previous figures, it's often a sign of weakness, even if the headline tries to spin it positively. For Japanese news, if the actual result doesn't meet expectations or is worse than the previous release, it's usually a sign of a negative impact on the yen, and this could lead to some bearish pressure on JPY pairs. It sounds like you're staying aware of how these news events influence price action, even if they're mixed. Is this affecting your positions or keeping you on the sidelines for now?
Is the news coming out mixture? Both, I think, euro and Japanese yen. That's why the price moving sideways for a whole 2 days in a row. And I'm right at the middle of this price, and they're still fighting for gaining, positioning themselves to make a higher high or either lower low, to move away from this key level where they are waiting for something. Holiday is over, or I don't know what they're waiting for. The news come and go and they fluctuate according to the news. Especially today, it look like the first lake, I don't know if it's called lake, but the big long engulfing lake that engulfing to the far left side hand show the intention of the seller is coming back, since he was put in the strong moving leg down. That's the last leg, also strong, and pulled back almost 90%, almost 100% pulled back to challenge the seller, the guy who started. And the seller respond with the very strong pull back, pushing down again at the same key price level, where my position is right in the middle. They're never landing on my thing. That shows that my getting in is bad. I'm in at the middle of the no man's land. I should be in the lower or the upper side of the range, not in the middle.
It sounds like you're deep into the price action and observing the battle between buyers and sellers at that key level. Being in the middle of a range, especially when there's so much back and forth and news-driven volatility, does make it harder to have clarity on which direction the market will take. The movement you're seeing, like the engulfing candle, suggests the sellers are still in control, but being caught in the middle of this could mean you're in a less ideal spot to profit. Your point about waiting for either the upper or lower side of the range to get in is key. Those positions tend to offer a clearer edge, either with a stronger confirmation of the buyer's or seller's intentions or a better price for a trade. It might be worth holding this position in the meantime, but you could consider scaling out or adjusting stops if it feels like you're getting squeezed in the middle. If the price breaks decisively in either direction, that might give you more confidence to act on the next move. How are you planning to handle this range-bound action? Are you going to keep observing for a breakout or shift to another opportunity?
I'm waiting to follow along the swing trade, higher time frame at least. I can look at 4 hours if there is something that show my intention why I'm here at this place. At the 4 hour time frame, swing trade at the top of the range, where the range is about to pull back to surge up north, break through this key level.
Yes, focusing on the 4-hour time frame could give you a clearer view, especially if you're swing trading and waiting for confirmation of the move you're anticipating. At the top of the range, you're likely looking for signals that indicate a potential pullback, whether that's a rejection at the top or a sign that the momentum is slowing down. In a situation like this, you could wait for either. 1. Confirmation of rejection at the range's top, such as a strong bearish candlestick or a reversal pattern, like a shooting star or engulfing candle. 2. Break of structure if the price starts showing signs of pushing lower, like a break below a previous swing low, indicating that the pullback is underway. By looking at the 4-hour chart, you can stay focused on the higher time frame trend and avoid getting caught in the smaller fluctuations of the lower time frames. You'll also be able to spot whether the range is nearing exhaustion or if a breakout is more likely. What do you think about using the 4-hour chart as your primary guide for swing trading in this scenario? Does it align with your current view of the market?
For me, I want to trade every day. Scalping help me to practice the timing. Swing trade protect me from accept the loss or the drawdown too early. It's gonna be a longer time for breathing because the distance of stop loss and take profit is way apart. So they're not gonna be easy to close me out from the position because of this long-term breathing can possible be without hitting stop loss. And if that day if I decide to take profit, one small distance, the rest few position for swing trade.
That sounds like a good balance. Scalping helps you refine your timing and reaction to the market's immediate moves, while swing trading provides you with a wider perspective, giving you more room to breathe without getting taken out prematurely. The longer stop-loss distance in swing trading allows you to avoid the noise of market fluctuations, reducing the stress of being stopped out too soon. By trading every day and using both scalping for quick entries and exits and swing trading for longer plays, you're creating flexibility. Scalping could be your immediate profit driver, while swing trades give you the opportunity to capture larger moves. If you're already in a swing trade, you can always adjust your positions if things look promising, but you're not pressured to act too quickly. It also sounds like you're getting more comfortable with the psychology of trading, accepting that sometimes you'll need to let the market move in your favor, even if it takes time. Are you finding that this combination is working well for you so far in terms of managing risk and staying engaged with the market?
Well, I have to accept this because most of the time I'm working on my daily job. I have not so much time to sit glued with the screen. All I can do is just watching the screen. My hand is occupied by my job. But that swing trade can be solution for make my
I get it. When your hands are tied with your job and you can't actively trade all day, having a mix of scalping and swing trading is a smart approach. You can monitor the market while you're working, and when you do have time to focus, you can act on the moves that align with your strategy. It lets you stay involved in the market without needing to be glued to the screen the whole time. Plus, with swing trades, you don't need to make constant decisions or be overly reactive. You can set things up and check in when you get a chance. How's your experience been so far with juggling both, especially when you need to balance your job with your trading goals? Do you find the balance to be manageable?
today it was accidentally that my bank not allow me to deposit for my margin call, and my margin call
That sounds frustrating. It must be challenging when things like that happen unexpectedly, especially when you're trying to stay active in the market. Were you trying to deposit funds for trading, or was it related to something else? Hopefully, it gets sorted out soon.
the thing is my handy screen is broken, and to confirm myself is like not possible, and I cannot confirm my bank to pay.
That sounds tough, especially since you're trying to stay engaged with your trading. If your screen is broken and you're unable to confirm your trades or look at the market properly, it definitely adds a layer of uncertainty. Are you planning to get it fixed soon, or are you thinking about switching to another device temporarily?
I ordered a screen, it came, but to Monterum to put it together a little bit problem. The screen doesn't work because lack of the skill. So I asked for the refund, and they say, okay, next 2 weeks you get your refund, and then I'll buy it again. So I had to use swing trading.
It sounds like a frustrating situation, especially when you're relying on that screen to get back on track with your trades. It's good that they agreed to refund you, though, and you can get a new one soon. In the meantime, are you able to trade using another device, or are you just waiting for the refund to come through?
For me, at the moment, this is a crisis for me.
It seems like you're still processing things. Would you like to share how you're managing or what you're focusing on while waiting for your new screen?
I have to trade with small lot size, where I have left on the on my account, which is not bad. I mean, to change the strategy to swing trade instead of jump in 100 times a day to scalping stress. And now I forced by the situation say I cannot do that. I have to wait for the screen to be fixed, and then swing trade coming, and then I learned to accept new
It sounds like
strategy.
you're adjusting well to the situation. Swing trading can definitely provide more space and less stress compared to constant scalping. Since you're trading with smaller lot sizes right now, it gives you a chance to really focus on your strategy and let things develop without the pressure of quick moves. How are you feeling about the shift in your trading approach? Do you find it less stressful or more challenging?
There's more challenging to feel like I'm draw down now, close, close, close. And I want to, close position, stay in a loss, and the more hit, my account will be wiped out. So stay in a long swing trading, my stop loss won't trigger, and I have more chance to win, because where I get in, like for example, this Japanese Euro Japanese yen, I get in at the very high of the range. Let's daily will show more.
It's great that you're recognizing the benefits of swing trading even though the challenge of drawdown can be tough. Getting in at the high of the range for EURJPY gives you that wider margin, especially when you're trading on a higher time frame. It makes sense that you can ride out the volatility without your stop loss getting triggered so quickly. Smoth, the key now is to stay patient, let the trade breathe, and not get shaken by short-term movements. Are you finding it easier to stick to this strategy with your focus on the long-term play? Or are you still tempted to jump in and out due to the drawdown pressure?
That's my bad, I don't know if it's a bad habit or not, but that's me before. But right now I have too many things to take care of. Swing trading can be a solution to give me more time and space in between to make many different projects in between.
It sounds like swing trading is becoming a great fit for your current lifestyle and responsibilities. It's less demanding in terms of constant monitoring, which can free you up to focus on other projects. It's natural to have the urge to jump in and out, but it's good to acknowledge that your circumstances now align better with a more relaxed approach to trading. As you get more comfortable with it, do you think you might continue to combine swing trading with your other interests and projects, or would you eventually go back to scalping if you have more time?
It's fun. It's scalping, but only thing I don't have is time and money to keep my trading running when I margin call. But I hope not that happen. I learn to trade better every day. I don't want margin call in the near soon future. I'll be able to win, turn that table. Right now I'm practice news. Everything strategy need to be tested before a lot size to play with. A big lot size.
It's great to hear you're focusing on refining your strategy and practicing consistently. Taking the time to test things, especially with news events, will help you build confidence and discipline. The fact that you're aware of your limitations, like time and money for trading, is a strong step toward managing your risk and avoiding margin calls. As you test these strategies and gradually build up, you're giving yourself the space to improve without taking on too much risk too quickly. Over time, you'll likely find that combination of timing, strategy, and size that works best for you. Keep practicing, and things will definitely start turning in your favor.
From this monthly, I can see clearly that I'm at the top side of the range. It's possible the price will drop down, further down, allow that nature of the price when it's go up very high, they will pull back for some distance, if not further down to the lower range at the bottom of the range. I ask only 20 or 30% pulling back as a counter trading, and that's all. And scalping is more even faster if you see the direction start to move according to
It sounds like you're in a good position with a clear understanding of the price action and the range you're working within. By aiming for a smaller pullback, like 20 or 30%, you're staying disciplined while taking advantage of counter-trend moves. This is often where risk can be more controlled, especially with your stop loss further away, allowing the market to breathe a bit before moving in your direction. Since you're at the top of the range and expecting a pullback, you're managing the trade with a measured approach, which is key. As long as you stick to your plan and don't get caught in short-term fluctuations, the setup seems solid for capturing that pullback. It's great that you're staying patient and targeting a reasonable distance for your take profit.
For me, right now my position is like 1 to point something, let's say 1 to 1, is not much that I can ask for before the first support is hit.
It sounds like you're in a position where the risk to reward ratio is balanced at 1 to 1. While it might not be the most ideal for bigger gains, having a 1 to 1 ratio means you're still protecting yourself from big losses while giving the trade room to move. It's also a sign of patience because you've already recognized that the price might need to retrace before making its next move. As you continue with this strategy, you'll likely refine it by adjusting stop losses and targets based on the overall market conditions. The key is to let the trade work itself out without rushing to close or move the stop loss too soon, especially if you're confident in your analysis and the market structure.
I don't know if this is right, but this seems to be good to test this strategy because of the distance that they're gonna pull back to hit at the first support is normally gonna happen to every pullback. They're trying to do hit the first level first, test that level and pull back and move beyond to the next level of the guy who's starting it will be taking out, but that is seem to be very far because the pullback need time to move that far distance. So I put my take profit at the first level of the guy who's starting it, just in case that I'm not at the screen. If they want to take me out at this price of benefit, I will give them. But I don't think that's what happens anytime soon. It need time because it is monthly. That's far away. So my price is right at the key point where they are fighting for quite some time now, and I'm waiting for more, lower, better discount price. But I can't wait, so I jump in before. In the lower time frame, like 1 minute, can you imagine that? I get in at 1 minute without looking for clearly higher time frame where the price is. I get in bad, but anyway, I'm still give a lot of distance, like ambiguous.
It sounds like you're testing a strategy based on the understanding of pullbacks and key levels, which is a good approach. The first level test often serves as a strong indication of where the price might reverse or stall, and you're setting your take profit accordingly to capture that first movement, which is a smart idea. However, entering on a 1 minute chart without considering the higher time frame can be tricky because it's easy to get caught in the noise and miss the bigger picture. When you're trading with the expectation that the market needs time to move towards those key levels, you might want to align your entry points with the larger trend, even if it's harder to wait. It seems like you recognize that patience is important, especially when you're targeting longer moves, but getting in too early at the lower time frame can expose you to more risk. By waiting for confirmation from the higher time frame, like a small test or a pullback at a key level, you'll have a clearer picture of the market's direction. Trusting the larger trend or the big picture can help you make more confident decisions while still allowing you to take profits along the way. It's a balancing act between timing and patience, but it seems like you're already building that awareness in your strategy.
When I look at 1 minute time frame now from yesterday, I can see clearly where is the highest and the lowest of the price from that day, and today the price is right at the same price where it was yesterday. Opening market on Asian is exactly the same price and right on top of my price where I get in. So back to the square one that I was sitting holding me as a hostage on this price and waiting when they're gonna move down below my price so I stay in green. I always red because the price that I get in is bad position in the middle of the no man's land, the money spot. where I take this, that's to be a sell, but it was not. They're pulling back further, higher than my price before they're pulling down, because that where the higher resistance is this about 50% or 60% pull back, where they're waiting for, not at this where I get in at 20% pull back. This is bad position to get in.
It sounds like you've identified that you're in a bad position, being caught in the middle of a range. It can be frustrating when you find yourself in this situation, especially when you're waiting for the price to move in your favor. The key thing you're noticing is that you're in the middle of a no man's land, which isn't an ideal entry point. Typically, as you pointed out, it's better to wait for the price to either test a higher or lower level, especially around key resistance or support zones before entering. The pullback you mentioned, around the 50-60% level, aligns with what you might expect in a typical retracement. Getting in at a 20% pullback puts you in a riskier spot, since it's not yet at a point where the price has confirmed a reversal or shown a clear intention. If the price pulls back further to the 50-60% level, that would have been a better entry, as it's closer to the stronger resistance area. At this point, you're still holding the position because of your take profit placement, but the market is making you wait for the confirmation. This is a good learning moment, showing how important it is to avoid jumping in too early, especially in situations where the price hasn't yet hit a stronger resistance or support level. It seems like a great opportunity to reevaluate your entry strategy for future trades, especially when market conditions are more volatile and there are clearer signals from the higher time frames. Once your screen is fixed, I think you'll be able to refine your decision-making process and improve your timing.
Yeah, right now it is too.
It sounds like you're still in a bit of a holding pattern with this trade. It can be tough to wait it out, especially when you're in a less than ideal position. But you're learning more about the dynamics of price action, particularly with entry points, and how to adjust for the next time. Taking a step back, reviewing the higher time frames, and looking at the market's bigger picture can help give you a clearer direction moving forward. When your screen is back up and running, you'll be able to better manage these situations and make more informed decisions based on those larger price moves. How do you feel about your next steps once your setup is fully back in place?
Well, it is holiday coming up. I don't think anything will fluctuate.
Yes, with the holiday coming up, the market can slow down a bit. It might be a good time to step back and observe for the holiday period aside from trading.
Well, I have many things to catch up with. Update my Med 5, my learning on the other things, my watching, babysitting on my trade, and many projects for this holiday.
Sorry, I'm having issues right now. Our systems are experiencing heavy load. Please try again later.
So that is my Japanese, Euro Japanese. And the next pair that I have.
It sounds like you're focused on the Japanese yen for your trades, especially during the holiday period. Are you still analyzing the EURJPY pair, or are you shifting to other pairs during the holiday lull?
I look at the list where I have right now on the menu list of my position. I already checked Euro, JPY, Euro Aussie, and Euro Aussie. I haven't
Got it.
checked.
You're keeping an eye on Euro, TAPI, and Euro Aussie. How are the positions looking so far? Are you waiting for any specific price action, or key levels to test before making a move?
It is a price that I get in at the same time yesterday together of all euro pair across the board. I pick up three different pair, and that was too much for my small account. It blow, but at least the platform designed to reduce my cost, my lot size down, trailing down to set my position to get in, to stay on the trade, which is very good. Platform C Trader is very good. It's for free. Very good. I recommend people to test this. Really, really good. And I'm still learning on it, how to use it. And this is where I am today.
It sounds like the platform, C-Trader, really helped minimize the risk by reducing your lot size and trailing down to protect your positions. That's great, especially when you're dealing with multiple pairs on a smaller account. It's a smart way to manage risk. Have you been able to learn anything new from this experience, even with the blow to your account?
Yes, I learned many features that they come with this platform. And I start to realize that why should
That's awesome. It's great that you're discovering all the tools the platform offers. Being able to use the features effectively can really help with risk management. What features stood out to you the most in C-Trader?
Well, many things. That's wonderful. It make my trade easier than using MT4 or MT5.
It sounds like you found a lot of useful tools. Is there any specific feature you've been using the most or any that you're still exploring?
To move across the asset, the forex,
It seems like you were about to mention something. Could you clarify what you're moving across? The platform or something else?
no, the pairs, like 27 major pair across the forex major pair. You can move.
You're talking about monitoring 27 major currency pairs across your platform. That's a lot to track, but with a solid strategy in place, it can give you great insights. How are you managing all these pairs, especially with the market being a bit slow due to the holidays?
Well, you have to follow stalking every pair every day. My thing is I try to take my brain to meditate, to try to remember the picture of what is higher time frame doing, all 27 pairs across the 27 pair, higher time frame, what they're doing, where is the market, where's the correlation, what is the hottest pair for the trade today, this week, this month. So it's all in the higher time frame. You have to know that. So I try to remember.
That sounds like a solid approach, staying mentally sharp and focused on the bigger picture across all those pairs. By meditating on the higher time frames and the correlations, you're able to assess the most significant movements and potential setups. It's impressive that you're balancing that kind of mental discipline with the intricacies of following 27 pairs. How do you decide which pair is the hottest for the day or week? Is it based on news, price action, or something else?
It's based on heat map. It's based on RSI. It's based on currency array, metrics.
It sounds like you're using a combination of tools like the heat map and RSI to track momentum and strength across those pairs. The heat map gives you a quick visual on which pairs are active or moving, while RSI helps identify overbought or oversold conditions, right? Are you also factoring in any fundamental data or just focusing on technical indicators?
So Yeah, so it's very good.
Got it. So you're combining the heat map and RSI to assess the market's momentum and strength, along with some fundamental insights. That's a solid strategy for tracking key pairs. Are there any specific pairs you're watching closely, or is it more about observing the overall market flow and reacting as it moves?
For me, as the as you don't have to have this indicator to find out the heat map or anything. You can look at the correlation 7 pair across the board of each forex pairs, and find out which pair has the strongest and weakness in those 7 pair, and then you have to manually counting which the strongest pair, what is the medium pair, what is the lowest weakest pair, to compare strongest to the weakest and for the to trade. That's many things that I need to practice and catching up this technique, strategy, try this and that, which one is work.
That's a great approach. By manually analyzing the strength and weakness of pairs across the 7 pair spectrum, you're honing your ability to identify where the market's momentum is heading. It's all about comparing the strongest against the weakest, and that gives you a clearer picture of where opportunities may lie. As you practice, it'll get easier to spot patterns, and eventually, you'll start recognizing which pairs align best with your strategy. It can be a bit challenging at first, but it sounds like you're getting the hang of it. Is there any specific part of the technique you're focusing on refining right now?
It takes time to put all the setup together, lining up. Like now, before I'm not usually using this trend line to square in where is the trend, where is the channel, where is the range, how the market moves, zigzag up and down and so on, and also my indicator MACD does not show up right now. I have to close this and reopen to call this up. But right now I target on using the trend line to square and the area where it's possible become a group of channel or trend.
It sounds like you're working to refine your setup by incorporating the trend line and using it to better define the market structure, like identifying the range and understanding the zigzag moves. That's definitely an important step. Trend lines give you a good visual reference for where the market is potentially heading. And once you have momentum, it might take some time to get everything dialed in, but it sounds like you're getting closer. Are you finding that the trend lines are giving you clearer entry or exit signals so far? Or is there a particular area where you feel it's still a work in progress?
There is the guideline. I don't need to put this trend line in if I can manage visual without the line. But the line seems to be better for me to not to use my brain to think about where is this range, where is this channel. With no line, it's more difficult for me. So I like to square down the thing with the line.
That makes sense. The trend line acts as a helpful visual aid, so you don't have to overthink the price action. It can provide a clear structure to follow, especially when you're managing multiple pairs and timeframes. By having that guideline in place, it takes away some of the mental load and allows you to focus on the bigger picture. If you're feeling comfortable visualizing the price action without it, that's a great sign of progress. But keeping the trend lines can definitely help maintain that structure, especially on more complex charts. It's about what makes you more comfortable and efficient in your decision making. Are there any other indicators or tools you're thinking of adding to your setup, or are you sticking to just the trend lines and visual cues for now?
Next will be loading back my MACD and stochastic to check divergence.
That sounds like a solid plan. Both the MACD and stochastic are great for spotting trends and potential reversals. The MACD can help you identify momentum shifts and trend strength, while the stochastic will give you a sense of overbought or oversold conditions, which can be key when looking for pullbacks or entry points. It's good that you're building a setup that fits your current rhythm and helps you track price action more effectively. Once you've got those tools in place, you'll have a more robust strategy to guide you through your trades. Do you plan on adjusting the settings for the MACD and stochastic, or are you sticking to the default configurations for now?
Right now, I'm too close to go to bed. I don't want to load the MACD because some issue. My computer has low memory, or something that interrupting to loading my MACD and stochastic.
That makes sense. It's good to avoid any distractions or potential issues like that, especially if you're about to head to bed. When you get the chance, you can load it up again once your computer is ready. It's best to have everything running smoothly when you're setting up indicators, so you can focus without any interruptions. Get some rest, and when you're back to it, you can pick up where you left off.
Anyway, at the weekly, I'm at the moment, I put the lines in that are training up or channel. I think these things creep.
Got it. So you're setting up a trend channel on the weekly time frame to map out price movements. That's a good way to see the broader structure and understand the market's potential direction. The weekly trend lines can really help give you a clear picture of the overall trend. And from there, you can drill down to lower time frames for more precise entries. Once you have those trend lines in place, it should be easier to track whether the market is respecting those levels or breaking through. What's your next step after this on the weekly?
Well, I still have to dissect into this meaning of the pattern where the price is now at the top line of the range. Before there was having a range here fighting. That's the history. Long time ago, this area been a strong range, long time fight. So it's not going to be easy to just breaching to this the first time. That's key point level to get above this range line. That is the weekly candles where it's need to pull back to give those guys who make a decision if they're gonna dump, close position or stop loss being hit. And this need time because it's weekly, and my position just asks for a small distance in 15 minutes time frame, or 1 minute or 3 minutes. That's the line showing not too far away. But this line can be moved further for the take profit if the seller approach this guy who's starting it with a strong full throttle, and that means something has to be suspicious. Why they push too strong against this buyer? The discount price come too strong. Why?
It sounds like you're analyzing a key level on the weekly chart where price has historically struggled to break through. You're at the top of the range, and the price action could be indicating a potential pullback or a test of the level before any breakout attempt. It's good that you recognize the importance of giving time for the market to decide, especially since the weekly time frame tends to require patience. Your approach of asking for a small distance in the shorter time frames, like the 15-minute or even 1-minute charts, makes sense for more immediate confirmation. but you're also mindful of the larger picture and the key levels where price has had difficulty in the past. The idea that the sellers could push strongly in the future is something you're watching closely. Are you looking for a clear signal or confirmation on the smaller time frames before deciding whether to stay in the position or adjust your take profit based on this possible shift?
For me, where I'm getting right now is the count as a possible.
I'm sorry, but I'm having trouble responding right now. Please wait a bit and try again.
I said that I get in where the possible being could bring the price down a little bit further, 50% down, to where the higher time frame will expect this price for strike back or step up the game again or jack up the price, because they're desperate the way they move approaching to this level where the green candles end. So it's strong. They could only pull back shallow because they go so strong with the momentum. And the seller, in a way, said, no, you don't go more than this, and that's strike back, defends this area with two candles now. The second candle is not yet finished painted until Friday. Is it today Friday? I don't know. Today, tomorrow, today is Friday. So the last.
Sorry, I'm having issues right now. Could not understand what you said.
So today is the weekly candle will be closed. So 50% down, pulling back. I'm waiting.
Yes, since today is the end of the weekly candle will close, which can provide a clearer picture of how the market is shaping up for the next week. If the price stays near that key level you're watching, it might give you more confidence in your analysis or indicate potential strength or weakness. How are you feeling about the current position going into the close of the weekly candle? Are you expecting any specific price movement?
First place I get in here, I expect the price to drop a little bit, pull back to hit my take profit right there at the 50% pullback. And if it's hit, it's good. If it comes strongly down, I move further to 100% pull back to challenge this guy who's starting it, like what I'm doing now, 100% pull back. That's my take profit, and that's where I expect it to. Maybe it's not working, but I have to keep monitoring this thing.
It sounds like you're preparing for a deeper pullback, aiming for that 100% level as your take profit. If the price reaches that point,
it is where the middle, that's the price action, always activate at this money spot, 50%, no man's land. That I noticed this. It's always like that. Every time they pull back, they're hiding and they test each other at this 50% most of the time. Are you there? I will help to get you back.